time-tested trading strategies for all levels of experience. You're going to learn the real trading strategies that I use to trade stocks for the last 10 years. As a full-time trader, I've tried various trading setups and patterns to adapt to the ever-changing market conditions. In this video, I'll give you a list of proven trading strategies that have been working consistently for me and hundreds of other traders I've mentored in the Humble Trader community. For each of these strategies, I'll break it down for you, the level of experience needed, and what kind of traders are most suitable for that particular strategy, the ideal market environment and the time frame for each setup, the strategy criteria, trader psychology behind the setup, and my very own live trades to help you understand price action and strategy executions for entries and exits. All of the trading strategies included in this video are taught in the Humble Trader Academy, but today I want to share them with you all, my fellow traders here on YouTube. So whether you're a beginner or an experienced trader, you'll learn something new that can improve your edge in this market. All I'm asking for is a big smash on the like button and share this video with your trading partners. To elevate your trading experience, I prepared each of these chapters and the timestamps in the description below. Feel free to save this video and learn at your own pace, and remember to use the comment section to ask me any questions you may have. Okay, let's begin with the best trading strategies for beginner traders. A very important mindset that I want to share with you here is that in trading, the simpler the better. So that's the reason I handpicked two of my favorite trading strategies for newer traders: the morning dip buy strategy and gap up reversal long. These are the two setups that I consider to be the most suitable for newer traders because of these three main reasons. Number one, these are the most consistent patterns that can be identified almost every day or every other day among the stocks in play. Number two, I started to see some consistency in my trading progress after developing these strategies, and I'm still trading these same setups after 9 years of trading. Number three, and most importantly, no short selling is involved in these beginner trading setups. Short selling generally requires a lot more experience in risk management, and you also need a lot more capital to have access to premium brokers and advanced trading research tools. So, if you're struggling to trade consistently, not sure how to develop a systematic trading approach, or you're pretty new to trading in general, make sure to pay attention to these step-by-step tutorials and take notes. Are you ready? Okay, let's begin with the first Humble Trader trading strategy. If you've seen my video lessons before, then you know that a good strategy must have a set of straightforward criteria and a repeatable pattern for you to time your entries and exits. In this video, you're about to learn how to identify the correct chart pattern for this strategy, 4 simple criteria to buy the dip, the technical analysis and psychology behind this setup, and last but not least, I'm gonna show you a live trading demo of how to execute this buy the dip strategy. The best part is that you can apply this setup to any stocks above 500 million market cap. So even though you see me trading a $400 stock in this example, this is still very applicable to much cheaper stocks like SoFi or even Palantir. If you enjoy these kind of step-by-step video lessons, then make sure to drop a like down below. Alright, to properly trade this buy the dip strategy, I always follow 4 important criteria. Number 1 is a stock uptrending on the daily chart with multiple levels of support areas. That starts by going over the technical charts pattern that you must be able to identify to enter a trade. So on the charts over here, you're looking at Nvidia. I know this is a more expensive stock, but once again, this is applicable to any stocks over 500 million, whether it's $5 or $10. So you can see on the daily chart, this stock has been on a tear. Pretty much since the $400 held on the daily support here, the stock has climbed up $100 per share to testing that $500 area. So you can see this stock has been setting higher highs day after day and higher lows. So you can see once it broke through that recent resistance around here, 473s, the stock tested 500, had some small pullbacks here and there, but you can see this range on the daily Every time you dip to around this area, 480s, 490s over here, you can see these like small little daily wicks candles. The stock has been getting bought back up. So you can see there's a lot of support around this 493s area and down here 490s. And then over here, you can see these areas around 484s as well. And below that, you have more support down here at 478, then later on 473s. So this is what I mean by you have multiple levels of support. After the stock has started consolidating, you can see a lot of highs, dip back down to lows, bounce back off again. This is the multiple levels of support that you want to see if you're picking a stock to buy the dip. And it's not just this month, the stock has done that around the same levels. You can see all the way back in August. Over here, the stock has tested very similar levels before, and each time it's bounced off. Over here, broke above it, bounced off that same levels, retested the highs, and came back down. So this is the kind of charts you want to see in order for you to pick the stock to dip by. You don't want to see the kind of stock that just goes straight up and straight down. So a good example of a stock you want to avoid to buy the dip on is something like this. You can see a lot of straight up and down the next day, straight up, no consolidation on the daily at all, and you just go straight back down to where you came from. So this is not the kind of chart I would buy the dip on for this particular strategy. So a deadly mistake a lot of traders make when buying the dip is that they are trying to catch the falling knife. Again, the key difference is that you're trying to buy the dip on an uptrending chart on a daily time frame, and you're buying at very established intraday support. So now looking at the intraday chart on NVIDIA, you can see there's a lot of support around that 493s, 490s area. On this day, particularly that we traded it, 493, sold off, bounced, had a nice bounce. You can see once again that same support area is tested here the previous day and the last couple of days before. So just make sure that whichever support area, whether it's 490 or 493, that you are using to trade this particular strategy, it's been tested intraday in the past couple of days before. Moving on to criteria number 2 for this buy the dip strategy. Is the stock forming consolidation or reversal patterns near the key support area that you identified? Remember earlier I mentioned that you're not trying to catch the falling knife. You need to wait for consolidation or confirmation. Now what does that look like? There are a couple of different ways to identify potential reversal. A very simple one is you are waiting for the first green 5-minute candle to form after multiple red selling off candles. So in this example, I also took this trade on this day. You can see the stock sold off from 497 previous pre-market highs area to that daily support at 493. So you can see consecutive red candles selling into the open, and once that first green candle forms, that's when you actually have the bounce. And you can see the exact same example the next day. The stock spiked to 505's pre-market levels, then you sold off to that same 493 support area. Multiple red candles selling off, then you have the first green candle to finally form around that daily support, 493's key level area, then you got a $5 per share bounce. A couple other ways to look for reversals can be higher lows and higher highs on the 2-minute or 5-minute chart, or some people even use 10 minutes, that's fine too. Or another way is to see whether the stock really quickly bounced off that support area, and that would be price action. And don't worry if you feel a little bit lost right now, because I'm going to be showing you step by step later in the live trading example for this buy the dip strategy. Alright, we're back to criteria number 3. Is the market stabilizing or uptrending instead of selling off all day? I think this is such a simple concept to follow as a trader, regardless of what kind of long strategy you trade. If you are generally long biased, you should concentrate most of your buying power or trades on days where the market is uptrending or consolidating, green on the day. And at the same time, that means avoid going long when the market is just selling off all day. You can see the market sentiment really simply by going to the market tab over here on Weibo. You can see markets tab, And you can see a heat map of the overall market condition across different industries. You can also see globally how the market's doing over here as well, and as well as how many gappers are holding up on the day, the percentage change, as well as how many stocks are making new highs. A lot of times these are the strongest stocks in the market. Just by doing this very simple thing will increase your win rate drastically if you're long biased. Criteria number 4 for this particular strategy. This should be a given, but you don't want to see negative news that's causing the stock to sell off. It's fine if the stock has no news or positive news, but you don't want a very negative catalyst that's pushing the stock down heavily. And luckily for us, on today's dip buying strategy examples, the stock had very neutral to decent news. But obviously it would be even better if the stock had very positive catalyst. So now that you learned the 4 very important criteria for this buy the dip strategy, the next step is trade planning. As a trader, you should understand the technicals and the psychology behind a strategy. Only then you can manage your entries and exits with proper risk management. So we did talk about earlier that the daily support area we're looking at is around this 493 zone. You can see that daily support, a lot of little wicks on the daily. The stock is getting bought back up around that key level. So looking at the intraday chart, you can see the stock spiked and later on sold off to that support area. So for me, what I'm looking for is, okay, stock is selling off. Where is the previous low day? If I looked at the previous day, which I also did bought this particular stock at the exact same price area, you can see 493's bounced off nicely. And then the previous day, you actually rallied to like $500. So on this particular day, if I bounce this here, I want to see if I can get, around that, at least VWAP area, that's a nice price target, or even 500s if we get there. So we're talking about potentially, $3, $4, $5 per share upside. But at the same time, when we plan out risk for this kind of entry, you want to make sure you are risking at least $1, $1.50 for a stock like Nvidia, because it's considered a high beta, large cap stock, meaning it's very, very volatile. So and if we look at the previous day, you can see the exact same level, 492, 493's area that's been tested the day before. So when I long this area, I need to be okay with risking yesterday's lower day of around 492s, so about $1 per share. And if my price target is the pre-market highs 496, that means I'm risking $1 per share to make $3 or even more. You can see it went all the way to like 498. But you're risking at least $1 to make $3 and potentially higher. And these kind of price targets is the beauty of this particular strategy. You can often get really outsized reward that's more than 1 to 2, 1 to 3, or even more, because your entry is waiting for the stocks to sell off to the support area. Remember, you're not buying the stocks breakout at the high of the day. In this example, if you're buying the breakout all the way up here, that's at 497s, your risk to the downside is a lot greater. And sometimes you have very limited upside like this one. The one caveat of this strategy is that you have to be very patient and wait for your entries to buy the dip. You can see later on in the 2 live trading examples, there was one that I definitely got in way too early. And that made me sell my position for a profit way too soon and missing out on almost $5 per share upside. If you've been following along on this strategy lesson, please remember to drop a like down below and feel free to ask any questions you may have in the comment section. Okay, so now that you've learned the criteria for the strategy, including the entries, exits, and the stop loss area, let me show you my live trading executions using this dip buying strategy. Okay, to start, you can see I already traded a lot of different tickers for about an hour. You can see the realized and unrealized down here, but I want to bring your attention to Nvidia. On the chart down below here, I currently have 0 position in Nvidia, even though I traded a long and a short side. You can see I had that 492's area drawn out on the intraday charts. That's going to be the key level I'm using. So note I'm using 5-minute chart on the top and 15 minutes at the bottom. You can see I just got in 1,000 shares of Nvidia at 493.20s. Back at the 5-minute chart, Nvidia. I'm waiting for the stock to bounce. This is definitely an example where I'm kind of more anticipating my entry instead of waiting for confirmation. But you're gonna see later on, I'm gonna add after the stock has started to form the 5-minute candle for confirmation. You can see that 493 is holding up nicely on Nvidia. Yes, you did like sell off a little bit to like 492.50s, but that's like what, 50 cents unrealized. So you want to give it room to breathe, at least $1 to $1.50. You can see after a couple minutes, Nvidia is finally starting to show a bounce all the way down here, the first 5-minute candle that I was looking for. You can see I'm looking to buy 500 shares more of Nvidia, 493.60s, 493.70s. So I added how much? 510 shares, 493 average. Now that gave me an average of, you can see down here, 493.40s, 1,500 shares. Again, we're buying a bounce, right? I think earlier I mentioned that with this, I'm looking for a bounce as close to VWAP area as I can get to, or potentially higher. So you can see VWAP right now is 499. But if I can get to that previous high intraday, that 498, that's still like $5 per share. That's pretty good. So you can see the first 5-minute candle closed green down here. Again, that's a very simple and technical way to buy the dip with confirmation. You can see, fast forward a little bit, I sold, just 500 shares locking in at 495s, 300 shares at 495s, that's what I meant. 1,200 shares, 493.40s average. Stock is now back all the way close to 496. And this is like what? Just a span of less than 10 minutes. You can see 2 5-minute candles have formed. So this is a very, very quick trade. That's a really good thing about trading these high beta stocks because the bounces are huge. As long as you're comfortable risking $1 to $1.50. Fast forward, I definitely sold this one too soon. 495s, I sold another like 200 shares. So I'm keeping just the 900 shares left on Nvidia. I have a good average at this point. I'm not gonna risk $1 per share at this point. With the remainder shares, right? I sold 600 shares. With the remainder 910 shares, I'm gonna set my stops, break even on those. You can see on the 2-minute chart, you're holding up very nicely, higher highs, higher lows. Same on the 5-minute chart. So at this point, the trade is risk-free. It's either, I realized $1,000 on Nvidia and have this unrealized go back to zero, or it actually bounces to 497, 498 for me to lock in an even bigger profit. So I'm really trying to let this winner ride out longer. So you can see I'm trying to sell a little bit at 497 if we get there. I like to put an order out. Sold a little bit, probably a little bit too soon. You can see I sold 300 shares at 496, close to 497. Definitely could have held longer. So I sold pretty much all of it, besides that 300 shares at 497. So you can see lock in $2,900 on Nvidia by the dip strategy. And I'm keeping the unrealized $1,000 with 300 shares. So I actually didn't keep recording, but I did hold on to Nvidia all the way to about, you can see over here, 498, as close to that as I could, 497s. But regardless, that's like, a $4 per share on the final sale. And all of that is risking $1 per share on Nvidia around the 492s area. So I just want to show you one more example of the same Nvidia dip buy strategy. This is actually the day before. So you can see I got in the 1,000 shares at around 492.99, just call it 493s area. That's also lined up with previous day's close. This little dotted line area, that's the prior day's close. So that's multiple supports lining up together. So since this is like an opening trade, it's almost like a scalp. I treat almost all my trades within the first 20 minutes of the open as scalps. Just because of so much volatility, usually when I trade these, I don't add to it. You can see I have 1,000 shares with one entry and that's it. And I'm just looking for a bounce. Ideally, I was looking for that pre-market highs area, which is what, 495s, 497s. Those two will be good price targets to aim for. You can see stocks wicking back a little bit. But again, if it breaks down lower day, I'm out, risking that $1 per share, taking that $1,000 loss. You can see we're already bouncing, so that bounce happened way too quickly. 494s, nice little bounce. You can see the opening is very volatile, which is why I treat all my opening trades as like little scalps. I rarely add to my opening trades. I only start adding after about 10 o'clock. But yeah, you can see this one, 495s. If I get it, I'm gonna sell into that. So I'm up about $1 per share on Nvidia. On the 2-minute charts, also holding up nicely and reclaiming VWAP, as you can see. Fast forward a couple minutes later, you can see we're testing at 495s. I sold 300 shares into 495s, realizing $600. Now let's see if we get a higher day, which is like 496, 497. That'll be great. But I have a feeling I didn't have the patience to hold that long. Being that it's still like within the opening time, I know how volatile things can be. So I always prefer to sell into that opening breakout. You can see I sold into 495s, locking in $1,300. I still have unrealized 850. I don't think I get to sell that. Maybe I did. Okay, I'm selling all of it at 497.99. You can see it did look like it was forming like a long wick around here, and a lot of times these like wicks, that means it's a false breakout. So that's why I want to lock it in. Then I'm all out. You can see lock in $2,000, within the first 20 minutes of the open at 495s. And by the way, back to the intraday chart. Even though I didn't keep on recording, you can see on this chart, I basically got out all the way here, 495s. I got out here, but the stock later on continued rallying past the pre-market highs, 497s, go to 499, then eventually at the end of the day went all the way to 505s. Obviously, I left a lot of money on the table. As you can see, this very simple buy the dip strategy can be very profitable and repeatable day after day if you can truly master it and learn the 4 criteria we talked about earlier. In just the last 2 weeks, I've traded this particular setup many times, on expensive stocks to very cheap stocks. I hope you're starting to get the knack of day trading and how to have a repeatable process. This buy the dip strategy video lesson is not only teaching you how to identify a reversal pattern, but more importantly, how you should be planning your entries and exits to achieve proper risk-reward ratio. Having a defined set of criteria and risk management rules are also extremely important to succeed in trading. The next strategy is slightly more advanced and well-defined version of the dip buying strategy, which I call the gap up reversal long. This strategy has been talked about a gazillion times on my YouTube channel because it's literally my A++ trading setup. I trade this strategy almost daily. As long as there's large cap gappers, good companies with good catalysts, then I'm good. Quick reminder here, I send out free email watch list every single weekend. So if you want to see these potential day trade and swing trading ideas, make sure to sign up free down below. And now let's dive into the second beginner-friendly strategy, the gap up reversal long. In this video, you're going to learn 3 golden criteria for you to use as your strategy checklist, the psychological and technical factors behind this long strategy, understand what really makes this pattern repeatable and suitable for beginners for timing entry signals, as well as a live trading example of how I executed this strategy and made over $7,000 in under 30 minutes. To kick off this particular strategy that I use for 2 trades today, you should learn the 3 golden criteria first. So number 1, you want to see a huge overnight gap up. So for example here, the stock gapped up from $79 to over $98 pre-market. This is an over 5% overnight gap up. Number 2, you want to see a very strong positive catalyst. In this case for the stock, they beat on earnings on all 3 metrics. And number 3, you want to see a very bullish daily chart. So in this particular example here, you can see we're gapping up over the daily resistance at $93, $95, $96, and also $98. And that's what I mean by a very strong bullish daily chart. And we'll go over each of these criteria in detail in just a little bit. Now let's talk about the psychological and technical factors behind this gap up reversal long strategy. Of course, we talked about earlier, you want to see a huge overnight gap up. And not just any gap up, you want to see a gap up in this case with very positive earnings catalyst. And once again, like I explained many times on this channel, the reason you want to look for these gappers have gapped up so much overnight due to a positive catalyst is because you want to have other investors, traders, institutions be attracted into the stock to create volume and range for you to profit from. That's the whole reason DDOG was able to gap up from $79 to $96 pre-market, and even after that continued to break through $100 here pre-market highs, and then slowly trend all the way up to 104. That's the kind of range we're talking about. We're not talking about 50 cents move. We're talking about a stock that can move 2, 3, 5, 10 points in one day. Now let's take a look at the technical analysis on this particular stock now. The reason you want a huge gap up pre-market and not just any gap up, you want to see the stock already kind of trending up pre-market. So you can see after hours it gapped up. Pre-market this morning, despite a little pullback at around 8 o'clock, you had a pullback from $98 down to $94, but you later on reclaimed that pre-market VWAP over here, reclaimed on the 5-minute chart and slowly reclaimed to $98, $99. This provides you the pre-market level to use as intraday support. And you can see that pre-market support area, $95, $96 range, is what I'm gonna be using as key level later on in the live trading recording. And once you have that key level to use from both the daily chart as well as intraday, you can use that level to plan your risk, entry areas, and potential profit targets. So in this case, if I get in around this $96 area, I want to be aiming for that pre-market resistance around $99.50 or $100 mark, and even higher to the daily chart. You can see over that 100, you have upside to 101 here, as well as on this little wicks here on the daily, 102s, and potentially even higher to 104. Now, before I dive into the live trading example to go over this trade step by step with you, let's talk about what makes this particular strategy or pattern so repeatable and suitable for beginner traders to get started. So the first reason I think this is a very great strategy for new traders to get started is because it's easy to find these stocks. Like I said earlier, with all the criteria we just mentioned, these gap ups, especially on large cap and mid cap stocks, they happen very often. Among these stocks like Apple, Tesla, DDOG, or even cheaper stocks like Block or Coinbase. And you can do that with either paid or free scanners as well. Now, the next reason I think this is a very beginner-friendly strategy is that the technical support and resistance levels on the daily chart, especially like I showed you earlier, are very likely to form and very easy to plan out. Like I said earlier, if you just use a daily chart, on this example here, you can see all the potential support, resistance, and you can use your intraday chart to kind of reaffirm your thesis. It's quite simple. I shouldn't use the word easy. It's simple to plan your entries, risk reward, and upside price target. Next, let's talk about planning for these entries. You're not buying a breakout on this particular strategy. You're buying the breakthrough of the key level consolidation and you're watching a pullback and slowly grind up higher. That's the reason you're gonna see in my live trading recording, I use the 5-minute chart as well as the 2-minute chart. You'll see in a live trading example that I'm not getting in at the high of the day breakout. I'm buying on these little pullbacks at 97, VWAP reclaim, and once it starts consolidating over that $99 area, and then selling into the breakout. And this is how you can also plan to have a decent risk reward. When you're buying the breakout, a lot of times once the stock breaks out, let's say right here at 101s, you'll immediately run into resistance $1 or $2 later. You don't have time to let this thing reclaim VWAP, reclaim pre-market highs, and slowly trend up. Okay, enough talking. Now let's dive into this live trading example of how I executed this particular strategy on 2 different trades and made over $7,000 in 30 minutes. We're gonna talk about commentary on the 2 stocks and my executions. You're gonna see my entry, stop loss, as well as profit target, and how I read price action to stay in a winner and let it work. So you can see over here, market had just opened. It's 9:30 a.m. market time. You can see DDOG 2-minute chart at the bottom here. You can see I got in once the stock tests that VWAP area, the pre-market VWAP we talked about earlier, at around 97.80s. I started in with 1,000 shares. Now my plan is to slowly add into it. My starter size on this will actually be 500 shares, but I think today I'm feeling quite good about the stock. Fast forward, a couple minutes later, well, only about 2 minutes later, you can see we're still teetering around the 97.40s area. I'm down about 40 cents, but I'm not panicking. I'm looking at the stock, looking at if we're gonna hold that pre-market VWAP, or are we actually gonna test that key level I planned out at $96? You can see I have an order sitting there, seeing if I'm gonna get filled. Fast forward a little bit, you can see we're still trading around that $97 area, with a small pullback here and there by 1 point. But once again, this DDOG moves in big ranges. You cannot be risking just $1. And it only went down to 96, 40s for a split second. Let's see, does it break down or does it slowly consolidate and reclaim? You can see on the top, I like to switch back and forth between the 2-minute and the 5-minute chart. On the top over here, you can see I'm looking at a 2-minute chart. I'm looking at, okay, are we really selling off or are we just slowly holding that, pre-market support area around $96? You can see I'm trying to see if I can just add a little bit down here at $96. On the 5-minute chart, you can, and as well as the 2-minute chart, you can see little wicks at the bottom of the candle getting bought back up. To me, that's a bullish sign, especially for a stock that has such a strong catalyst of earnings beat. We are testing that VWAP area on the 2-minute chart. So my starter size is usually 500 shares. You're gonna see me trim it down from 1,000 down to 500, just to be safe. After all, we're still within 10 minutes of the market open. I trimmed 500 shares just to, reduce my risk a little bit during this uncertain period. So I'm down to 500 shares at 97.80s average. I realized a loss of $380. You can see at the bottom screen here on the 5-minute, we're immediately jumping over VWAP. I added back in 1,000 shares. That gave me an average of 97.90, and we are already skipping up. That's the thing with this DDOG. It's a stock I've traded in the past. When it breaks out, it kind of skips in dollars. When it sells off slowly in 20 cents. So I'm glad I got in. You can see on the top, on the 2-minute chart, we are already skipping through to $99. That's how fast these things go. Again, bullish daily charts down here. That's really great to see. You can see on the daily charts, you are breaking out. Through that $96 pre-market, you really don't have any strong resistance until 101, 102s on the daily. So that's the beauty of having a daily chart on the side, as well as your intraday chart. So you can see the bigger picture. And we are already testing that $100 mark. I added some more over here, as you can see. I added up here 500 shares. Now I have 2,000 shares at $98.38 average. I sold a little bit, should have held it, but I did sell 300 shares at around $100 because I think I was looking at that pre-market resistance right here. You can see on the yellow line, that pre-market resistance, trying to be safe. But sometimes you don't want to be too conservative. I sold a little bit more, what a shame, into that 180s. No worries, I still have a remainder of 1,400 shares. We're pulling back to that $99 area, but the action still holds up quite well. You can see this DDOG, despite that $100 rejection, you're not getting like if you pause here on the top, 2-minute chart, you're still, yes, you are below that $100 area, the resistance, but you're holding up the $99 quite all right. So you're holding up, you're not seeing like an instant rejection down to VWAP. So to me, it's a good sign. The stock needs time to slowly consolidate to go up higher. This is around the time I noticed snow, looking at that 157s. That's the daily resistance, as well as I also did a quick due diligence on the catalyst and the daily chart. So identify that as the same setup as DDOG. You can see on the bottom left-hand corner, snow daily chart. Once you clear through that 157s, you have a lot of upside to 160, 161. So added some more. You can see added back to 2,000 shares at DDOG at that $99 mark. Now I have an average of $98.78 because I see it consolidate. I see it testing that pre-market highs once again. What a monster. I'm up a little bit over unrealized $4,000 with 2,000 shares. And at the time, market's also trending up quite nicely. Hope you guys are following along on this strategy and using our strategy checklist on screen here. If you're enjoying the video so far, please remember to drop a like down below. I really appreciate it. Also, a reminder that you can get a free weekly watch list of all the stocks I'm watching for the next week. You can do that by signing up with the email down below. Fast forward, I sold into that 101s, I believe. Yeah, I sold into that 101s. So I realized a total of $1,400. Oh, a little bit more now. Realizing $3,100. Now I have a remainder of 730 shares on DDOG with the same average as before. I think I just started managing way too many positions. As you can see, I have like Nvidia at the bottom, and I was also looking at Snow. So fast forward now, you can see on the top window, I'm entering Snow, the exact same strategy as DDOG. Entering only 500 shares, same strategy, also a nice gap up reversal long on the daily chart. Very strong market overall today. So you can see on the top here, after that 157 is broken out of, you're upside to 161. So that's where I'm in with 500 shares, averaging about 158.20. So I'm essentially risking $1 per share on Snow. And on DDOG, my average is so well now I wouldn't let this go into negative. You can see I'm just trying to let it work. I'm being patient on the 5-minute chart on DDOG, trying to see like, okay, are you gonna consolidate and go higher? DDOG testing higher day, $180. We're pulling back a little bit on both Snow and DDOG. I know a lot is happening at the same time. It's been a while since I've had like 3 positions open at the same time. So it was a very exciting day. Quick recap, DDOG, I still have 700 shares. And the Snow, I still have the 500 shares. I haven't sold any. But I think my target on this is 161. And both of these Snow and DDOG, they are the exact same strategy. I wish I had allocated the same amount of position for Snow. But it's like I said, it's hard for me to manage a lot of positions at once. So I usually choose to focus on one ticker, which is DDOG, and then kind of like switch back and forth and look at Snow, Nvidia, and like, you know, all the other tickers at the bottom. So you can see I sold 200 shares on Snow at 160. So locking about $2 per share almost. You can see I realized about $340 and I still have unrealized $520. Nice breakout on Snow. This one I never got a chance to add, other than my starter of 500 shares. DDOG is now testing 102s at the bottom window. You can see I'm looking to sell everything into that 102's breakout. Snow is also breaking out as well. Testing that 161s that we talked about. Nice. Locking in $4,000 on DDOG. Now I only have 300 shares left. Snow is now on the top here. You can see I'm trying to sell 162s. I don't know if I end up getting that, but it's getting there. 160-170s is the ask, as you see here. I mean, these are very, very strong candlestick trends. We're talking about on the 5-minute chart, these are 3, 4, 5 green, very bullish candles. That's how you read price action. You just sit here and you let it work. The candles are doing just fine. It's not choppy. It's not pulling back. It's just straight up slow and steady. Okay, DDOG now testing 103s. I believe I'm gonna get out all of it right here. Yeah, so I just sold the remainder 300 shares at 103 on DDOG, locking in $5,800 on this particular stock. Let's take a look at what I'm about to do with Snow, because that's the exact same strategy. Now, I believe I'm gonna try to lock in Snow at 160-120s with a remainder of 300 shares. Sold at 160-120, so locking in $1,200 on Snow. So together on these two tickers, both are the gap up reversal long strategy. That is a total of $7,000 profit on the day. Once again, on this particular strategy, you're looking for an overnight gap up like you see on DDOG. You can see it's the same thing on Snow. Same overnight gap up from 144 over to 156. Very positive catalyst on both of these tickers, and you have a very bullish daily chart, and you're gapping up over the recent daily resistance. You can see Snow, a huge gap up over that, 156s, 158, and that gives you decent upside all the way to these daily resistance areas around 161, 162. In trading, you really don't need to have anything complicated, like complicated trading strategies. It really does not guarantee you better outcome or more profits. If anything, that leads you to be more confused. So that's why I highly recommend you to master these two beginner trading setups. Practice how to find the right stocks suitable for these strategies based on the criteria we talked about today. And always remember to plan your risk reward before entering the trade. And remember, you can always use paper trading to test out these strategies first and get familiar with the process and executions. Okay, before we move on to the next level of trading strategies, I'd like to ask you to share your thoughts and personal takeaways with me down in the comment section below. I really appreciate your insights and feedback. Moving on to the next level of trading strategies, I have two more advanced trading setups for you to get your feet wet in the realm of small cap stocks. These are the strategies that you can use for a lot more volatile stocks like GameStop, AMC, or the low float stocks. I'm sure you've probably seen many day traders showing big 6 or even 7-figure profits trading these meme stocks and low float stocks. But the key difference between these profitable traders and the ones who lost really badly in these short squeezes is their experience in risk management and knowing the right timing to trade these kind of volatile stocks. When you have mastered risk management and how to manage your emotions and discipline as a trader, trading these kind of fast-paced small cap stocks can help you achieve higher returns with a lot less capital and possibly less time required in front of the screen. Let me ask you this question. If you have $1,000, would you choose to buy 10 $100 apples and wait to sell them at 101 to make a profit of $10? Or would you rather buy 1,000 $1 apples and sell them at 150 to gain $500 profit in total? That's the name of the game with these small cap stocks. Trading these cheaper small cap stocks is much more capital efficient than trading the large cap stocks like Amazon and Google. Of course, the small cap stocks are usually much more volatile, and their prices move a lot faster in wide ranges due to lower share float. But that's the reason having proper risk management and position sizing is even more important when you're trading small cap stocks. However, when you have proper risk management and position sizing in place, trading these kind of small cap stocks can often give you a much higher risk-reward ratio. For example, risking $100 to make $500 potential profit. So if you've been trading for a while and you understand how to cut losses and manage your position sizing with proper risk management, then I want to share with you these two of my favorite small cap stock trading strategies. The first one is called the short trap consolidation long setup. The second, the Bagholder short selling setup. Again, I cannot stress this enough. The reason why I consider these two particular strategies more advanced is because you need to be very disciplined and very selective and very matured in terms of risk management and following your rules. Because once again, you are trading the risky, volatile, low float small cap stocks. So just make sure you're actually paying attention to this portion of the strategy criteria and especially risk management. Okay, with all that disclaimer aside, let's start with the short trap consolidation long strategy. The US stock market has been hitting new all-time highs in the past couple of weeks. The S&P 500 is on multiple months of bullish trend, and we've been seeing many small cap stocks that surged hundreds or even thousands of percent in a single day. In this video, I'm going to share with you how to find and trade short squeezes before they go to the moon. It really is a great time to be trading, and an even better time for new traders to get started. However, I'm sure a lot of you are wondering, how exactly do you find these profitable trading opportunities in this market? This year so far, we've been very blessed with multiple crazy runners in a single week, providing us so much opportunities. But in order to be profitable as a trader, you need to know how to choose the right kind of stocks to trade, and most important of all, how to recognize a repeatable pattern. I'm sure many of you eventually want to master entries and exits for your strategies, so you can rinse and repeat. To do so, you must be able to recognize charts patterns and setups. There's no other way around it. Maybe the only other way is to smash the like button and make it rain Lamborghinis. In this video, I'll use my own trade examples to explain a repeatable process that you can learn to find and trade the hottest stocks in the market. You are going to learn the short squeeze chart pattern and how you can find the pattern early on, the pre-market criteria I use to find the right kind of stocks to trade, why trader psychology, news catalysts, and technical analysis are all closely related, and how I determine whether to go long or short a stock based on my criteria. And the best part is that I have both winning and losing examples to show you later in the video, so you can learn from the ideal and the losing scenarios. As you know, no strategy out there works 100% of the time. But if you have one though, let me know. Let's begin with everyone's favorite, the short squeeze chart pattern. Every other day in the stock market, there's news or press release that drives a company's stock price to gap up significantly during pre-market hours. And sometimes these runners can gap up a lot even without news. Short sellers tend to pay attention to the stocks with the highest percentage increase, also known as the top gainers. And most of the time, these top gainers are low-float, small-cap stocks from smaller companies with very weak fundamentals. Not only do they not have good financial statements to show, the news catalysts are probably ambiguous or sometimes recycled from the past. These kind of stocks can easily get overcrowded with short sellers, especially when the shares to short are easy to borrow or cheap to borrow. As short selling has become so popular nowadays, you've probably noticed a lot more short squeezes on these kind of small cap, low float stocks, especially the ones with poor fundamentals. And in terms of price action, you can identify the price levels where short sellers are most likely trapped by looking at where the stock's consolidating, usually multiple times. Let's start with looking at this really fun stock, Hollow. You can see this huge parabolic daily chart here. The stock came from about like $4, came all the way to 20s, broke above the 42s, 50s, and close to $100. You can see it's been through multiple days of massive short squeezes recently with no actual news. Whenever you see a small cap stock that's a top gainer on the day with no actual news, it's very tempting for short sellers. Now, I want to show you how you can identify a potential short squeeze chart pattern before it happens. So let's take a look at the first day this thing gapped up. By the way, with no news, okay? On this particular day, when the stock went from over $4 to close to $15 at the end of the day, you can see, just looking at the intraday charts here, you can see pre-market, this thing started gaining some traction in terms of volume into the open. Now, pre-market high is this 390 mark, okay, on the stock. A lot of times that pre-market highs is going to be the first sign of a bullish strength if the stock is able to break above it and hold and continue trending up. Now you can see the stock did exactly that, broke above that 390s pre-market at around 950s and never looked back. Created higher lows and higher highs. So besides the uptrend, another key you can identify here is that it never actually created any drastic sell-off. It just kept on holding that steady 5-minute trend. This is a 5-minute chart. You can see it keeps on making steady, slow new highs, pulled back, but you're holding this really, really distinct uptrend the entire day. If you line up this line, all the lows from this lower day all the way to in the middle to the afternoon, it's a very clear uptrend. I think what's even more dangerous, of course, now we're reviewing this in hindsight, but you can learn all of these bits and pieces for next time, is that the stock was relatively easy to borrow. There was a lot of locates available for short sellers, and they were extremely cheap as well, some for less than 1 cent per share. So a lot of times you can see this is how they get you. The stocks just steadily uptrend all day, no drastic pullback. So that means none of the short sellers were kind of let out. They just kept on adding as the stock broke through multiple daily resistance levels. You can see stock broke through that 770s, 10s, and $12 and never had a huge pullback. So you know this thing is piled on with short sellers. So we just talked about the pre-market highs key level. That's going to be the first important key level for you to identify potential short squeezes. Now the next level to remember is the previous day's highs. For small cap stocks, I've identified this pattern again and again. Whenever it breaks through the previous day's higher day, whether it's a spike or a clear breakout, you usually get huge volume coming in. You know, a lot of short sellers getting squeezed out, new buyers, breakout buyers coming in to buy. A lot of times that's where you get a huge spike after the break of the previous day's higher day. So you can see the exact same thing here. After this thing kind of pulled back a couple of days on the daily charts, you can see it formed that huge spike on the daily charts here. 40, 90s, just call it 41. Now, this huge breakout day where the stock broke through $41 and went close to $100, that happened when that $41 level, this day's higher day and this day's higher day lines up with this particular day's pre-market highs. You can see right here, pre-market highs is trading near that $41 level. And at the open, Pretty much, once this thing clears through that $41, then you have a huge VWAP hug. You can see stock consolidated around this VWAP area, and then you get a huge squeeze to $95. Recognizing this chart pattern is almost an essential skill that most day traders need to have, especially if you're trading price action. If you're a long bias trader, you want to spot the short trap consolidation and size in to maximize the potential return of your winning trades. So again, two key levels to keep in mind: pre-market highs and the previous day's higher day. So my own trade on Hollow that I do want to go over actually happens on the second day of this huge gap up. You can see the stock actually gapped up after that $12 broke out, went all the way to that $41 key level we talked about, pulled back and started consolidating pre-market. This is where I got long pre-market, thinking that we're going to test that $41 higher day and continue to new highs. This kind of chart pattern is actually one of my favorite to go long, sometimes pre-market, after seeing a lot of shorts have been trapped either previously or the day before. So that's the reason I got in at $30 pre-market on day 2 of the move. Because I saw that day 1, a lot of shorts are still trapped. Sure, a lot of people got let out after hours, causing a huge squeeze. But I think pre-market, it looked like it was consolidating for another squeeze move. And you can see I was only about half correct on that thesis. You can see pre-market, we did consolidate around a lot of higher lows. Pre-market holding at 25.60s, and especially if you can see that $30 channel here. Once this level keeps on holding for a couple of times, I did get in around $30, thinking we're going to test that 41s again, which yes, we did. But right after we spiked to that $41 level, we immediately sold off, and it was actually halted down multiple times. So as you can see from my execution chart, I did sell some into that $41 spike, but I was really trying to hold at least half of it for a much bigger move to the upside. So just keep in mind, whether you are trading this short squeeze chart pattern on the first day or the second day like I did, or pre-market, the key is to identify whether there's enough shorts that's trapped inside the stock that can help you squeeze the stock even higher. And that's the reason I didn't go short on the second day. I've noticed that a lot of these low float runners are going up for 3, 4, 5 days straight before the eventual unwind. So it's actually a very dangerous time to go short selling too early on. Remember, you gotta adapt, right? If it's too early to short, not ideal to short, then go long until it's suitable for short selling. So here on the screen, I have a few more chart examples for you if you want to practice and familiarize yourself with this specific short squeeze chart pattern. And my recommendation is to use the 1-minute or 2-minute intraday chart. Besides technical analysis and chart pattern, a key component of a good trading strategy is a stock selection criteria. This is especially true for small cap stocks. You must learn how to choose the right kind of stocks to trade with your strategy. Do you remember these video interviews I've done with millionaire day traders? Many of them talked about tracking and analyzing stock statistics such as volume, float, initial market cap, range, percentages, and so much more. You may not like numbers, and that's okay because I definitely don't. But you should at least have a general idea of what kind of stocks you should be trading with your setup. Don't worry, I'm gonna give you a cheat sheet to help you find stocks that could potentially squeeze and run hundreds of %. And I'm not gonna charge you $10 for the secret stock criteria recipe. All I'm asking for is a gentle tap on the like button. Fundamentally, we're looking for low float small cap stocks with fresh news catalyst, ideally one that's gone on with the current theme. For example, AI, artificial intelligence, has been very hot lately. So a lot of small cap stocks that's related to that category are likely going to run. So you're gonna want to scan for stocks with a market cap that's below 1 billion. Remember, you're looking for small cap stocks. So if you look at my configuration, you can see that I'm looking for stocks below 1 billion market cap with no minimum filter. And for volume, you want to see at least 1 million shares traded pre-market. It's okay to scan for a little bit lower, like I did, only 20,000. But again, when I'm actually choosing the stock to trade, I want to trade these ones that have over 1 million shares traded. And as for float, I want to make sure ideally I have something lower than 10 million to ensure that it has the range to go and can create a lot of volatility. So besides market cap, volume, and float, the next important thing is to look for gap up percentage. Now, this really depends on the cycle of small cap stocks that we're in. Currently, we're seeing a lot of stocks gapping up above 80%, 90%, and even hundreds of percent. So you can see on the scanner right now, you're seeing some stocks gapping up above 90%. Yesterday, we had 200% gainers. Now that's the current hot cycle we're in. So as long as you set a filter for a minimum of 20%, you should be pretty good for small cap stocks. Next, I do have a golden tip for you guys, and take note. You should also have a way to check whether the stock is easy to borrow or hard to borrow. Remember earlier we talked about the reason a lot of these small cap stocks can trap a lot and then squeeze up higher is because there's a lot of shorts available to borrow for the short sellers. So that means if a stock is easy to borrow or cheap to borrow and it's trading a lot of volume and has really low float, there's a good chance that the stock could keep on squeezing up higher. Again, it's not guaranteed, but it's a very good indicator to look for. Now, in terms of how to check whether a stock is easy to borrow or hard to borrow, and the cost that's the reason a lot of pro traders have multiple brokerage accounts. That's number one. Number two is being in a trading community. It's very easy to check, hey, how much is ABC costing at brokerage A, B, C? You can compare and contrast very easily. A simple way to check is also on the actual trading platform. So you can see this is Dash Trader. That's the one I use with Centerpoint Securities. If you look at the montage window, if you have HTB, that means the stock is hard to borrow. Then you have to actually go into locate window and look at how much the cost is per share. Now, if you look at this stock, NVIDIA, S over here, that means it's easy to borrow, means it's free to borrow, essentially. So those are the few simple ways you can use to check whether a stock is easy to borrow or hard to borrow, and what are the likelihood of these low float stocks squeezing up higher. Now that you've learned how to recognize a highly repeatable short squeeze pattern and how to find this kind of stocks yourself, it is now up to you to internalize what you learned and create an entry and exit strategy that works for you. That's why the next topic I want to talk about is knowing the best entry timing and market environment for your strategies. I'm going to use my own trading style for your reference. I have a few sets of trading strategies, and some traders will call them different playbooks. When it comes to trading small cap gappers, I also have a strategy that focuses on short selling the stock on the day it gaps up. Now, you might be wondering, why didn't I short sell hollow? So the key differentiator for me to decide whether to go long or short or avoid the small cap gapper, it's no longer about the catalyst. That used to be the case prior to 2023. But nowadays, as you can see, we have runners with no news flying to the moon. Now, the main differentiator I look for when deciding to go long or to go short is number one, whether there's a lot of shorts already trapped in the stock, and number two, does the daily time frame show a Bagholder daily chart? Again, we're talking about pattern recognition and trader psychology behind the technical patterns. So let me explain this Bagholder daily chart pattern to you using this particular stock, DTSS. So this is the daily chart of DTSS, the stock in question here. And the day I traded it is this particular day, over here, February 14th. I spent it with my favorite Valentine, the stock market. Anyways, you can see the reason I'm more short biased on the stock is the long-term downtrend it's had. You can see this is actually the stock I've traded many times in the past. It's always a pump and dump. It's very apparent for the daily chart. You can see stock gaps up, sells off over here as well. This is back in like 2021. Gaps up, sells off a lot of times. You can see this here in particular here, spike and sold off. Over here as well and here. So this is what we call a long-term downtrending daily chart. The stock, I forgot to mention, the stock also did multiple reverse splits in order to prop the share prices up. And whenever you have something like this, long-term downtrending, multiple reverse splits, and that's where you have a lot of bag holders holding the stock. Bag holders are basically people who have bought the stock high and refusing to cut losses. So I'm sure there's a lot of people who are holding the stock at $40, $51 and above. And again, once again, the pattern recognition theme comes back again and again, whether you're long biased or short biased like this one. The stock, I've seen this break out and sell off the entire gains many times in the last 8-9 years of my trading career. So that creates a natural bias for the stock. Now, that doesn't mean I'm guaranteed to make money on the stock despite knowing the bag holder short selling strategy. Yeah, because long story short, I actually lost money on the stock. What happened is I was actually way too early. You see, DTSS, despite the long-term bag holder chart, despite all the failed breakouts, there's one thing it does really well. When it squeezes, because everyone's so short biased, because the float is so low, it's only 1 million shares float, and despite the fact that there's no catalyst for the run, it can still squeeze from $6, as you can see on the intraday chart, all the way to $20. So I definitely got squeezed. I want to use my losing trade on DTSS to show you the importance of choosing the right kind of stocks to trade for your particular setup, and more importantly, knowing the right timing and ideal market environment for your particular strategy. When I was shorting DTSS last week, that was when all the low flow stocks, whether there's news or not, was flying to the moon. Everything was going 200, 300, 400%. So that was a market favoring the longs. I definitely jumped the gun way too soon on the short side. Again, there's always a lesson to be learned. This loss, I think about $3,000, $4,000 loss, is relatively small percentage of my trading account. But without proper risk management, this could have gone really badly. So as promised, we went over both my winning trades and the losing trades on this topic of short squeeze, chart pattern recognition, and stock selection. Once again, the only way to achieve consistency in trading is to find a pattern that's repeatable and to choose the right market for your particular strategy. Now, I want to share with you a crucial piece of information before you start to think that it's very easy to buy low and sell high in the realm of small cap stocks. Statistically speaking, most of these small cap stocks that gap up during the morning pre-market, they will start selling off after the market's opened, and they usually close red at the end of the day. The reason is that most small cap stocks have really weak fundamentals and financial records. So unlike the large cap stocks like Nvidia or Apple, no one actually buys these small cap stocks to hold for the long term. Most market participants want to make their profits quick and get rid of the shares fast. And that's why the prices for the small cap stocks, they often fall quickly, within a day or two after the huge run. So most of the time, day traders, including myself, were looking for short selling opportunities in these kind of trashy stocks. And more specifically, looking for historical resistance levels on the daily chart, where the bag holders are most likely gonna sell and dump their shares. Let me cue your favorite meme on this channel, my imaginary ex-husband, Mike Bagholder. And let's dive into this bag holder short strategy. I specifically want to go over 2 small cap low float stocks that I traded. There's a common theme that you will soon observe in both of these trades, which is how I wait for the right timing to execute my entries. In this video, I want to share a very crucial technique with you guys if you want to succeed in trading. How to time your entry to make your profits fast and reduce stress, either during pre-market or normal trading hours. How to analyze small cap stocks with various data points as your edge, my go-to strategy for trading small cap stocks, and how I find these stocks to trade with my strategy. So if you want to learn the sniper entry trading technique, including when to enter your trades pre-market, then make sure to smash the Lamborghini like button. Okay, I'm just kidding. I'll never tell you that there's a way to get the perfect entry in every single trade, but I will teach you some realistic technical analysis techniques that you can use to improve your entry and timing. So without further ado, let's get started. The first concept that I want you to pick up today is knowing your edge as a trader. If you don't know what that means, you probably are not ready to trade a live account. Let me keep it simple for you. If you want to make trading a consistent career rather than a get-rich-quick scheme, you should start by focusing on mastering one trading strategy rather than trading 4 or 5 different kinds of setups all at once. Some of you may call this a playbook, a pattern, or a trading setup. My point is that you should know what your focus is every single morning when you wake up to look for stocks to trade. If you are a breakout long trader, then focus on mastering your ability to find the right place and the timing the breakout entries. Or if you are a reversal trader, then focus on finding the reversal patterns to trade midday. After almost 10 years of trading, I've developed an edge in shorting the small cap stocks. I have my entry criteria, and I will specifically look for these kind of stocks that fit my criteria to trade. This is the real process of what I do day to day as a trader. You should not just wake up and open your trading platform and start trading random tickers that other people are talking about. That's what we call being a sheep. And as we all should know, sheep get slaughtered. There's no edge in that. Okay, now that you understand the importance of knowing your edge and knowing which kind of strategies to focus on, the next part of the video, I'll walk you through my trading strategy, the Bagholder short setup for small cap stocks. The Bagholder short strategy is essentially a highly repeatable setup that I've used throughout my trading career. It's specifically designed for trading stocks that very small cap, low float, high trading volume, and high gap up percentage, either during pre-market or the regular trading hours. I named this the Bagholder short because this strategy requires a clear and strong technical resistance level on the daily chart, or as many of you may call it, the supply zone. We'll go through a detailed scanning criteria for these stocks in just a little bit, but whenever you see the stock price approach a daily extreme resistance level, the bagholders who's been losing and holding on to those losing positions for days, weeks, or months, they finally get their chance to start selling their bags. Of course, that's with the hope of recovering some of their losses. This kind of selling pressure from the bagholders will likely cause the stock price to go down. Of course, that's also on top of even bigger selling pressure from insiders, debt holders, other dilution activities. These are very common scenarios we see with small cap stocks, especially those stocks with long-term downtrending daily charts like this. So now that you understand the psychology and the thesis behind this bagholder short strategy, the next crucial thing you need to learn is how to find the right stocks to trade. So here's how I scan for stocks to trade for this particular strategy. On the screen right now, you're looking at my stock scanner, Stocks, STOX. I have 2 different scans for this particular strategy. One is pre-market scanning, and one is during the middle of the day and even after hours now. So we'll start with the pre-market gap scan. So you can see my pre-market gap scan over here if you see my filters. I'm scanning for stocks greater than $1.50 with volume over 200K. This is pre-market, okay? And then I want to see at least a 10% gap up. And market cap, I'm looking for stocks that's under 800 million. So essentially, I'm scanning for small cap stocks. So once you can see the results here, I can sort it by gap percentage. So we are looking at the highest percentage gappers on the day. You can see all these different results here. And I'll go through what I look for on the chart in just a second, but let me show you what I do midday. During the middle of the day, I change my scan criteria to something different here. So I have a midday scan over here for small caps. If you look at this, I'm scanning for still stocks above $1 or $1.50. Volume, midday, I'm looking for 500K. Because in the middle of the days, a lot of time you get new runners during the lunch hours. So I'm keeping my filters quite low. Percentage, I'm still looking for 10% and 800 mil market cap once again. And since right now it's after hours, I'm casting a wider net. I'm using an after hours scan. So I'm scanning for stocks that have a change percentage of more than 10%. So I'm sorting everything by change percentage here and with much lower volume criteria for after hours scanning. So we can take a look at all these different charts here. BOF. So you can see this is indeed also a Bagholder chart for sure. If you zoom out on the daily chart, you can see this particular stock, it's been selling off ever since IPO around $6. $5 or $6, and since then it's sold off to just a little bit above $1. Today probably has some sort of catalyst and stock ramped up to the daily resistance areas around the 250s, 260s. Now, while I didn't trade this particular stock today, the reason it's still very useful to do the scan after hours is that you can plan for your trade the next day. So tomorrow morning, if this thing tests the same resistance, let's say 240s area, once again, 240s or even the intraday levels around the 220s over here, I will look for another short using this particular strategy. So BOF is indeed a Bagholder short. MTC, let's take a look. So chart-wise, you can see this thing is actually a breakout chart. So I would be cautious shorting this one in particular, even though you do have some small resistance around the 380s area. So if you look at MTC, even though it's a pretty big float, almost 200 million, the stock is still breaking out. So that tells you that there's some sort of catalyst that's quite significant. So I would be cautious trying to short this one. This one, I would not short this. So you can see we have like a lot of these like $1 stocks. WIMI, WIMI. This is also a Bagholder chart because I remember shorting this in the past before. If you zoom out long-term Bagholder chart, you can see this day's breakout, you're testing a lot of resistance around the 120, and next you're going to go to a 140s area. So this is another potential for the Bagholder short setup. Let's look for something slightly more expensive, perhaps. MULN, Mullen. I know this stock, very dilutive, as you can see. Multiple reverse splits. You can see a split here. So you can see the stock had a long history of selling off on this. And also recently, you can see a lot of resistance after today's breakout. You have some resistance around the 550s. Over here again, $8, 660s. This is a long-term dilutive stock. I just remember this thing ran up during 2020, and since then it's been selling off. So lots of Bagholders on this. So this is also another potential for the Bagholder short. Let's look at a couple here. CZOO. This one is indeed a Bagholder short again. I'm quite impressed that this thing actually held the gains today. So if you look at this stock, you're now testing the resistance around the $13 and also the $16 range. So those two areas will be areas I'll be looking to short into during the market hours, not after hours, obviously. But if you zoom out on the daily chart, again, long-term dilutive and downtrending chart. So these are the charts you want to be careful of if you are long biased. And if you're short biased, then these will be the kind of chart you want to look for as candidates to short into. So yeah, some more key metrics you want to look at on the scanner to make sure you are targeting the right kind of stocks to trade for this particular strategy. Is another really important one is insider ownership. So insider ownership essentially tells you how much of the shares available is held by people inside the company, CEOs, board of directors, etc. So you want to know that, especially if you're trading small cap stocks, because whenever we see high insider ownership on small cap stocks under 800 million, there tends to be, whenever the stocks break out, usually on one day, day 1, day 2, or day 3, you'll start to see a lot of selling pressure because small cap stocks, these insiders, they finally have a chance to sell some stock to make some money, right? If you think about it, most of the small cap stocks, they are not profitable. So the only way for them to make money, the insiders to make money, is to sell paper, which is selling their shares. Imagine if you had a stock that was only a couple dollars before, a couple days ago, like, for example, this one, BOF, which we saw earlier, had a high insider ownership. Over here, you can see anywhere around 50%, over 40, 50%, that's when insider ownership starts to become really, really high. Again, not always, right? We're talking about stock market after all. Nothing is guaranteed, but you can learn all these important data points to help you make the best decisions when you are picking which kind of stocks to trade, on the long side or the short side. Another metric you want to be aware of is IO, which stands for institutional ownership. Stocks with high institutional ownership, above 25-30%, they either trade in a tight range, so they don't really move that much after the initial 30 minutes of the day, or they are one directional because they can be very, very controlled by the institutions who own the stock. If they choose for the stock to not move that day, the stock is not going to move. If they choose for the stock to rally up, like as in they're buying more shares, the stock is going to rally. And if they're selling more shares, you bet the stock is going to have a beeline straight down, because institutions, they move the market. So those are just some small things to keep in mind when you are trading small cap stocks. Not only is the float important, market cap important, you want to make sure you have the gap and the change percentage, as well as make note of the insider ownership, as well as institutional ownership. The scanner you just saw on screen is Stocks, STOX, my proprietary scanner. I wanted a scanner that's very simple to use, web-based, so I can easily take it anywhere when I travel. And it's also available on your phone. So regardless of whether you're a day trader or a swing trader, full-time or part-time, you can easily find stocks to trade. And most importantly, I wanted to make a premium scanner with accurate market data that's affordable for everyone. That's why I spent the last 6 months working with a team of developers on stocks. We're having an opening promotion right now for up to 40% off. That's less than $42 per month. So make sure to check out the link down below or on stocks, STOX.io. Now that you know how to find stocks that fits this Bagholder short strategy, let's dive into the first trade example that I have for you. On this ticker, Rent, I made a relatively small amount of profit, slightly over $2,000. However, it was decent, considering the amount of time it took for me to enter and exit this trade within 30 minutes after the open. So on the screen right now, you're looking at Rent. This is the stock I traded on this particular day. You can see this giant first red day here. That's the day I shorted the stock and traded it on the downside. So let's just do some quick technical analysis, really quick, chart analysis, like what we did earlier when we were scanning for stocks to trade. Now, why did the stock catch my attention? If you look at the stock on the daily chart, you can see that prior to this huge breakout here, which I believe the catalyst was earnings, and they're trying to do something, on the back end that relates to AI. All these small cap stocks are jumping on the bandwagon, even though it's barely related to AI. So you can see stock breaks out, you're breaking through multiple daily resistance, so it's actually quite strong over here. I wouldn't short these small cap stocks on the first day with earnings news, but on the second day or the third day, that's when I start getting really interested on the short side. So you can see this thing broke through both of these resistance levels like butter. First day I did not trade the stock. Second day you can see this thing spiked broke through the day before's $24 highs, but it was unable to hold the gains. So that's the reason you have these long tail upper wick on the daily chart. So if you go look at the actual intraday chart, you can see this is the second day breakout here. You can see you broke through that higher day around $24 on the second day. Broke through, that's great. But then you actually slam back down below that $24 once again and close at lows. So whenever you see this kind of intraday chart where you break through the previous day's higher day, but you cannot hold the gains, you know there's actually a lot of selling pressure once you broke out. If we check the insider ownership, it'll be very interesting to see whether insider ownership on rent was high at all. I don't quite remember, but we can check in just a second. But that just helps with your bearish thesis that the stock eventually is going to sell off back to where they came from. So anyways, so that's the reason I started looking at the short side on the third day. So after seeing that wick on the first day, wick on the second day, especially when you cannot hold that $24 level, that's when on the third day I got interested on the short. So if we look at the intraday chart on the third day, this is the day I shorted it. So you have 2 green days before this. So essentially, when I look at shorting these small cap stocks on the Bagholder short, I'm looking at, most of the time, looking for a sign of the first red day to confirm my entry. Meaning this is the first day after this huge breakout move that the stock is unable to hold green on the day. So that's, a lot of times that's a signal for the longs to sell the stock, as well as, the early shorts, they have already kind of blown up. So if you look at the pre-market chart on that particular day, we're already under that $24 area. But on that day, $24 is the key level I'm looking for. Even though we never got to 24, I did start in a little bit pre-market. This is one of the rare times I'll trade pre-market because your risk level, makes sense. Like pre-market, I'll start, 1/4 or 1/5 position around 22, and then I'm risking at $24, or I'm leaving some room around $24 to add. So either a test of 24 or a break of pre-market low, which is this $20 area, will trigger a confirmation. Because once you break that $20 area, you're going red on the day. Because this is also the previous day's closing price, a psychological level for red to green or green to red move. Now, downside, this stock has a lot of downside because how far it's come. Remember, if you zoom out on the chart, you can see this thing came from at least $16, and then before that it came from $13, and then even $10 after that earnings breakout. And like I said earlier, most of the earnings runs for small cap stocks, most of the time, okay, not all the time, they give up most of the gains. So that theoretically, this thing still has more downside. But knowing that we have downside to $16 and then $14 and potentially even lower, that gives you the risk reward potential. Knowing that, okay, I'm risking 24, and once it breaks down 20, I'm risking $20 to potentially make all the way down to 16. So that gives you $4 per share to the downside if it breaks down $20. Okay, so over here on my actual execution chart, you can see my entries on the short side. You can see I started just before market open, so just a little bit pre-market, added some around $21. Now this is one of the rare cases where I'll start pre-market because number one, there's a lot of technical analysis that's already been proven. The supply areas, the support, that's already been proven the 2 days before. That's the first thing. So I know very clearly what my risk would be if I were to enter this pre-market. And number two, this is actually quite important because this is the first day that there's such low volume for the stock. The last 2 days, I don't have the pre-market chart, but the last 2 days, they were trading really, really high volume on the stock. So what does that mean? If you are short buyers, you know that the interest on the stock has already dwindled down. And I remember this was a Monday. So usually when you have these runners over the weekend, the second day or third days over the weekend, people forget about them. So on this new day, this brand new start to the week, people already were looking at other stocks to trade. They forgot about RE&T. So that's another psychological reason why this Bagholder short works so well. Number one, you're trading stocks that people forgot about, so less buying pressure. Number two, the stock has already been so extended and already failed to break out the second day. So you have proven supply area. And number three, you have a lot of downside. Like we talked about earlier, after this thing goes, green to red, below that $20 area, you have downside to that $16. You can see this daily support 16s, 14s, and then potentially even towards that, 11s or 10s. So you have a lot of downside. So that's just one of the very important benefits of this particular strategy. Now, obviously, the caveat is that you want to be able to time your entry well, which I'm really happy I did for this one because I did not touch a stock at all on the first day and the second day. So just remember, the first day may not always be the best day to trade the stock on the short side, but the second and the third day is usually where you have your edge. As I mentioned earlier, knowing the entry timing that works for your edge in trading is crucial if you want to become profitable. I don't always trade pre-market, but when so many factors like we talked about line up, I will take the trade. On this rent trade, my entry timing was based on the thesis that the stock was going to sell off at the market open or soon after that and end this bullish momentum. Once the stock goes green to red, that confirms the price action we need, and we can slowly add into a winning position and let it ride out, slowly fading into the lows. I hope that you're starting to get the knack of it. Don't worry if you're still trying to digest the concept of entry timing, criteria scanning, and finding the right stocks to trade, because I have another trade example to walk you through. This time, I have a recorded footage of this live trade, and you'll be able to see the trading process live. Are you ready for some live trading action? Please give me a gentle tap on the like button of this video and comment more trading recaps to let me know if you enjoy these kind of live trading recording commentaries. The second trade I want to show you is a similar Bagholder short strategy executed on WISA. So the next stock we're looking at is WISA, I guess that's how we'll call it. So the day I traded is this day in particular. Same thing, right? You notice I'm doing the same thing again that you saw in the previous example. I'm shorting on the second or the third day. Now the first day of the run was this move. I think they just had a stock split. That's where you can see the S here. I believe that's stock split. You can see 1 for 150 split. So reverse split actually. What usually happens to reverse split stocks is that their share size, the float reduced to very low float. So maybe this is 1 or 2 million shares float, but the price of the stock increase. So the market cap is still the same, but now the stock is now, you can see a $6 stock. It was probably a penny stock before with a lot more higher float. But that's the reason why a lot of these stocks run is because they become a lower float after the reverse split. So you can see the day I traded this day, if you look at this, it doesn't show on the daily chart, but the pre-market high was 1150. Now, I did not trade this one pre-market, and I'll tell you why. And I wasn't even looking at trading this in particular in pre-market. It's because pre-market on this second day, this thing already broke through yesterday's higher day. So that higher day yesterday was around this $8 mark, $8.40 to be exact. It's already gapping up above yesterday's higher day. So that's when I do not touch the stock on the short side, pre-market on the second or the third day. Unless the stock has already proven to me that it's gapping down or it's, pre-market it's a lot lower than yesterday's resistance, then I do not short the stock. Pre-market trading for that is just too risky in my opinion. If you look on the scan, is that WISA is still, a lower float stock, 9 million market cap. You can see the inside ownership, it's only 10%, so a lot less than rent. So that's something to keep in mind of. It's definitely a small cap stock. So looking at the intraday chart, even though I did not trade this pre-market, and in hindsight, that looked like the perfect entry, short $11 but risk $11.50 pre-market highs, I did not take it. I actually waited for the open when the stock broke down that $10 mark. That's way below $11.50. That's when I started the short. Seeing that there's a lot of selling pressure, just look at the volume at the open here. I use the 2-minute and the 5-minute chart side by side to look at the volume, look at the price action. So when the stock broke down that $10 mark and essentially underneath VWAP, as you will see on my execution over here, that's when I started adding more. So I'm adding along the trend to the downside in this case. I'm not anticipating as much like I was with rent. So we're about to dive into a live trading recording for WISA. Just remember these key levels. Pre-market highs, 11.50s. That's also going to be the rough risk. $10 intraday and the pre-market support. Once that breaks down, that confirms the trade. And of course, the VWAP breakdown. So you can see on the screen here, WISA is this bottom chart here. Market just opened, but I already entered $10 short and was covering some just to take some small profit around the 920s area. So a lot going on here. I was struggling with a little bit of update on the settings, but you can see I was already short 1,000 shares at $10 for WISA after the market opened. You can see at the open the stock immediately tanked. So I was already up 50 cents on the stock, 920s. I'm trying to take some profit, covering up some. I'm also struggling to locate a little bit more shares for the stock as well. So I already realized about $600 after the couple minutes after the market opened. Definitely got a little bit flustered because I was having some trouble locating more shares. So you can see on the 5-minute chart, stock is now bouncing off that VWAP. The yellow line is VWAP. So I'm looking to add back in around that $10 area, as you can see. So you can see I shorted $10 around that 500 shares at $10. So that gave me an average about $10, $9.99. Again, at this point, the stock is way below that pre-market high resistance of 11.50s. That's the ultimate risk. You can see really, really big rejection. So that was a good entry at that $10 mark. I added some more around 920s, adding into that weakness, shorting into that weakness. I think what's important to know is that each of these little bounces, the volume is a lot lower than the selling. So if you look at down here below on the 2-minute chart, your bounces, you have a lot weaker volume. On the 2-minute chart, you have a little bit over 600K volume, which is, compared to the selling volume at the very open, it's a lot weaker. So that's what, gave me the conviction to keep adding into it. Now you can see I added some more. Now I have about 1,000 shares with 955s average. I cut some once it broke through that VWAP. So you can see I trimmed another 500 shares just in case this does a crazy, nasty short squeeze reclaim, even though the price action was definitely weak for the stock. You can see I'm switching between the 2-minute and the 5-minute chart quite a bit. The 5-minute chart lets me see the bigger picture to see, okay, whether the stock is actually forming the downtrend or trying to double bottom, etc. So it's nice to switch time frames to kind of get double confirmation, if you will. You can see on the 2-minute chart, it looks like it's trying to reclaim, right? But on the 5-minute chart, it's still weak. So that's why it's a good idea to take a look at both of these time frames. I'm trying to add back more. You can see it's now cracking $9. That's almost the pre-market low support is around this $9 mark. So if that flushes, you're gonna get a big downside move for the stock. Fast forward a little bit more, after a lot of bearish consolidation below VWAP, you can see now we're finally flushing at $9 once again. Hopefully this is the real flush. I'm now still holding 1,100 shares, not a lot of shares, average 920s on the stock. At the same time, I'm also trading the exact same strategy on KAVL, CAVL. So that's the top chart over here. So yeah, this is one of those strategies where almost every day or every other day, you have some candidates to trade. So this is one of my favorite strategies this year. Okay, finally you have the rug pull. You can see stock is now down to 860s. I covered some small. In hindsight, you shouldn't really have covered because there's a lot more downside to that, 750s area, but it is what it is. So now I have about 900 shares, 980 shares with 920s average with some realized and half of it unrealized. You can see once I got into this position, I'm really not doing much. Once I have a good average, the stock is now downtrending. I'm really trying to let it run as much as I could to maximize your winners. You wanna make sure you're doing the opposite when it comes to losers. The losers, you don't wanna make it run, you wanna cut it short. But with winners, you wanna see how low, in this case, how low it goes. If you're long on the long side, obviously you wanna see how high it goes. But that's a key difference between winning traders and losing traders. Losing traders, they're gonna let their losers work because they're hoping that you'll come back, but they cut their winners short. So you wanna make sure you're on the right side of being patient. Let your winners run, cut your losers short. Obviously, I'm not gonna keep risking that 1150s area anymore, that pre-market highs. Now I'm risking my risk to around VWAP, 940s, and if it goes to my average, I'm gonna trim some, break even. So always move your risk down if you're short and the stock is going in your direction, or always move your risk up if you're on the long side. So you can see stock is flushing down, new lows of the day, reaching that $8 mark. I think my target is around that $7.50, $7 area. If we get there, ooh, that's a huge drop. Yeah, I think this is gonna hold to the downside. You can see that huge rug pull. This happens when you don't have bids to support the stock, and the next bid is a lot lower. That's where you get somebody hit the market order to sell, and you have to hit essentially the downside level in order to find enough buyers to buy the stock. So you can see the stock is not halted. So 5 minutes later, the stock just got unhalted, 776. You can see I'm gonna try to cover some here. I covered some, I realized about $1,200, have another $1,400 unrealized. I think I do try to let it work for the rest of the day, but eventually I got stopped out. It went to as low as $7, but I think I got stopped out during the middle of the day, around that 780s or something like that. So yeah, this is the final chart over here. As you can see, after the unhold, I covered a majority here, and the stock did drip lower, but I never covered around I guess lower day was 680s. I didn't cover because from the action, it just looked like it's possible for the stock to go all the way to red on the day. So I held on to the final, I don't know what you saw, I think a final 500 shares or something just to let a runner work. I did set an in the money stop around $8. So if the stock sold off to $6, great, I make another $1.50 to the downside. Now if I get stopped out, then I still stop in the money, I still end up making money on the trade. And you can see the stock eventually kind of reclaimed, took out my stop, sold off, and then at the end of the day rallied into the close. So it's a good thing to have stops. At the end of the day, I made about $3,000 on the day, and $2,700 or something like that, $2,400 was from the stock WISA on the Bagholder short strategy. Again, this trade on WISA highlights the importance of knowing your entry conditions and timing well before you hit the trade. Even though you saw from the recording, I let the trade run for a few hours longer during the day, I was still able to cover and take profits quickly within the first 30 minutes of the WISA short. Knowing that I locked in some profit, it really helped me think more rationally and reacted on the downside in the money when the stock broke VWAP rejections, which then helped me make more money as the stock continued to sell off as long as it stays in a downtrend. And remember, the most important part to this Bagholder short, as you saw on WISA, Rent, KAVL, and so many of the other Bagholder shorts I've traded the last 2 weeks, the most important part is finding the right stocks to trade and waiting for the perfect entry. This Bagholder short selling strategy has been working extremely well in the last couple of weeks during the cycle of small cap runners. I've been trading the same setup almost every single day on all these low float small cap gappers. So make sure you study the key takeaways today and feel free to ask me any questions down below. All of the 4 strategies you learned today, they're taught in detail in the Humble Trader community, with hundreds of like-minded traders who are trading together every day and helping each other improve from pre-market preparation to strategy execution during market hours. So if you're looking for a real trading community, as well as courses and mentorship, then visit the link down below to check out our offerings. Hopefully you enjoyed learning these 4 strategies today. If you did, I think you're going to like these other free strategy crash course over here.